Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of July the 17th, 2017. So to get started this week, we're going to begin where we always do with the US dollar index. Now, the first thing we want to look at is key levels of support. Now, over the last several weeks, I've talked about this swing low that dates back to essentially November 2016, which has seen the dollar rally fairly substantially off of this level, but we've been steadily moving lower ever since, as you can see, and more specifically, we've taken a pretty big hit over the last couple of weeks. So this swing low, once we zoom our charts in now so we can have a better look at what's actually going on here, we can assess that we've got very significant resistance at the VantagePoint 18-day predicted moving average at 95.83. Now, very soft inflation data again on Friday. Retail sales not good. So none of this is helping the US dollar. VantagePoint here, to their credit, basically this most recent dollar sell-off was identified back in the middle of June. So we've been moving steadily lower since, and there really isn't a lot of sign of relief here. Now, we are getting into an oversold condition based around the indicators, which may lead to a small bounce, but for next week, 95.83 in the dollar index. The 18-day predicted moving average from VantagePoint is likely to contain any rally. Now, when we look at Euro US, I've been a fairly strong advocate for the Euro, actually, particularly over the last several weeks, when we got this crossover from VantagePoint after we've had a period of consolidation. Now, that triple EMA cross has sent us higher. We've had multiple retracements, but we're only retracing to the 8-day predicted moving average, not the 18-day. Our 18-day coming in at 113.51. You can see that it's gone untested. This is a very good way of identifying whether there's buyers or sellers in a particular currency pair. And in this case, clearly the buyers are in control at the current time. So for next week, our key levels 114.38 down to 113.51, which is the critical VantagePoint pivot area. Now, our neural index has switched back to the upside. Our predicted short, medium, and long-term differences look good, as is does the predicted MACD. We're holding firmly above the 60 level on the predicted RSI. So looking at this, again, in my respectful opinion, I feel that VantagePoint was well ahead of the market on this particular move. As soon as that consolidation period broke, we had pretty much an immediate move to the upside. Now, the euro, a lot of analysts feel that the euro can't go any higher. I'm not in that camp at all. Over my career, I've traded the euro as high as the 160 area, so we have plenty of room to extend to the upside. Now, with US Swiss franc, again, this trade will mirror the dollar index. We are in a very tight channel here just to identify this. And looking at the VantagePoint indicators, our predicted short, medium, and long-term difference, along with our neural index, and our predicted RSI are all pointing down for this pair. Now, the top of this little channel that we're running in is the 97 level. Any move towards that area is reasonable to set our shorts. Our key VantagePoint level, 96.46. We're closing 96.32. So in order to really see this move and the dollar weakness to really take hold, we want a break of 96. When we break below 96, we basically want to short pretty much immediately because it's not a difficult trade. Now, as we come into the pound dollar for next week, the pound dollar, again, in my respectful opinion, the pound is grossly undervalued. Brexit is a very good thing for the UK. It's too bad they didn't do it years ago. Now, when we look at the indicators, again, we've got a fresh triple EMA cross, guys, here taking place at 129.05. We're closing 130.97. That's, I believe, the high point for 2017. And there really isn't any immediate resistance up top. Now, we always do want to make sure we're backing this out a little bit to have a look. And you can see that on the bigger picture here, after that trend line break and a close above this area, the bottom part of that range is going to be a significant level. So when we look at this for next week, the key VantagePoint level at 130 is likely to contain any of the downside, but only a sustained break of 129.05 would take the pressure off the upside. Now, again, our indicators are fully supportive of this particular move, and by the looks of it right now, we should have at least a couple of hundred pips on the upside before we see any major corrective move. Now, with the dollar yen, I had talked extensively about this one last week and how I felt that it was a very good sell off of this area. And once again, that was a trade on Trader Planet this week. And here, so when we look at this swing high, we combine that last week with our neural index, our predicted MACD, and the fact that our predicted RSI was in a heavily overbought condition. This move lower does not surprise me. Now, the key thing here, we are breaking below that key VantagePoint 18-day predicted moving average. That's coming in at 112.80. We're looking for the market to stay below 112.80 for next week. If we start pushing back above that area, we close above 112.80 on a couple of days in a row, not just for one day, but for 2 days in a row. If we're closing above that area, that would take the pressure off the downside. But if we maintain a move below 112.80, that should open up the bottom part of this range, potentially back into this area down here in this lower trend line area, down around 109.50. Now, we're not going to see 109.50 overnight here, guys. Currencies don't work that way. It could take weeks, if not months, to get down to that level. But the key thing we want to look at here on the downside is it is a target, and our upside is contained to 114.50, Now, again, our predicted short, medium, and long-term differences, our neural index, the crossover and the predicted MACD, all of these indicators from VantagePoint are pointing to further weakness in this particular pair. My only concern is that the global equity markets have got a bit of a boost from the Fed, but usually anytime the Fed props up the equity markets and tries to kill the US dollar, it tends to go the other way. So keep an eye on your stocks this week, but if the stocks continue to slide next week, the dollar yen will simply won't have a chance on the upside. It will move down. Now, as we move into our final three pairs, all commodity-based currencies, the CAD, the Aussie, the New Zealand, our key vantage point level 129.64. This pair has had a very substantial move to the downside. A lot of this has been based around the Bank of Canada rate hike. In my respectful opinion, they have it dead wrong. Not only will they not hike again in 2017, you may even see the Bank of Canada being forced to cut in 2018. So no sign of a bottom yet on this pair, but the more real money looks at the Canadian economy, it's going to be difficult to argue for further rate hikes here. So it's a one-off deal. In my respectful opinion, the pair is in grossly oversold territory. We're looking for a bounce here to some degree, even if it's back to the VantagePoint 18-day at 129.64. We can then reassess. But again, this pair has had a very substantial move to the downside. And again, to VantagePoint's credit, this call was made back in the early part of June, the beginning of June. We've had multiple retracements to get short again here. So again, a very good call on VantagePoint. And once again, I think excuse me, we are still going to have some further downside, but oil will kick in as the driver for this particular pair. Oil goes higher, US CAD will absolutely go lower. Now, with Aussie US, I've talked about this one over the last couple of weeks. Specifically in last week's weekly outlook, I talked about that this pair is getting ready for a bigger move. We certainly did get that last week. Australia, New Zealand, a fantastic trade last week also, as we had a big push up here. The Aussie, our key vantage point level, 76.46. The indicators here, guys, are they are moving towards overbought, so a corrective move could be in the cards, but as long as we're holding above 76.46, any move back down to this area is a buying opportunity. I would say the same thing applies to New Zealand US. Now, New Zealand US is back up at the high point here, guys. The swing highs from early January, the end of January, where we hit this top around 74. You can see we're breaking through this congested area of resistance here, but this is not an easy trade here, to be perfectly honest. A good call with this retracement, the triple EMA cross from VantagePoint still pointing up, but we need to break free and clear of this resistance zone. I would be more comfortable actually, if we can get this thing on a sustained basis above 74, then we'll have a free run higher. Now, the indicators are still saying we have room to extend up here. So in all likelihood, providing gold and the other metals continue to move higher, it's very likely that Aussie and New Zealand will move higher with it.